Investors and traders, welcome to the channel. Today is 26th of August 2024. Hope everyone is having a great day. We will be taking a look at the technology sectors and the key US technology stocks in this video segment. As always, this video is for educational purposes only and it is not a financial advice. I hope in this video you are getting my voice clear. I do apologize, maybe in the previous video I might have had some issue. I am using a proper mic, but it is on a tripod, so I might have been actually speaking either a little bit quiet or it was just a little bit away from me. But I hope in this video you'll be getting the audio clear, but I will actually take the advice from one of the subscribers and actually get one of those mics which I can just hook to my collar for the shirt, and then that way hopefully we are able to avoid these issues going forward. So thank you for actually giving that feedback. I really appreciate that. So we are looking at the weekly chart of the XLK, which is Spider Technology Weekly ETF. Now this week has just begun. Today was Monday, but what is really interesting is that in the previous videos which we did for the tech stocks, XLK was actually hitting back on the 5th of August, right at the 38.2% retracement, and this is going back to the October 2022. That is when the this cycle had actually started, or the bear market came to an end of 2022. It's actually it's a topic for another video, but we do have these cycles, longer term cycles, and one of those cycles that people like to take a look at is a 4-year cycle, which also happens to be a presidential cycle when there is going to be a election coming up in the United States. And then what we have seen from investors is that the really juicy part of that presidential cycle actually starts typically about 18 months before the elections actually take place. So the people who have actually studied these cycles are, they're very, very informed people in the market. They knew that that cycle was actually about to kick in, and then they actually got into it, and it's been a fantastic ride to the upside for a number of people who actually picked up on the cycle. Anyway, so here the market hit right at the 38.2% retracement. It's been a really strong move for the last 3 weeks, especially the week of 5th of August, 12th of August, very, very strong. And what the market has done now is right at the 78.6% retracement, and has actually not been able to close above it on a weekly basis. And of course, the week has just started. So it's just remember this pattern, because we're going to see this pattern in one stock, a really key stock. And in my opinion, what happens next, especially in this week, and also for a number of the tech stocks, and especially these ETFs, will depend on that one stock which is about to have its earnings come out really, really soon this week. Now, if we move over to QQQ, which is the Invesco trust, it's also got the technology stocks. It's a slightly different pattern. This one did not actually reach the 38.2% retracement. It went to about 78.6% retracement of this swing from 15th of April to the highs that we got around the early part of July. Now it is doing something similar. After having about a 15 or 16% correction, it's just still within that swing actually, and it's just also right at the 78.6% retracement. So either we break out of it and then we begin to take out the highs, so actually the bull move actually extends, or it's possible that actually this is a point where the market finds resistance and actually begin to rotate lower. So the chances of that we'll actually discuss further, because in my opinion a lot of it actually depends what happens on Wednesday because of the earnings coming out from NVIDIA. So let's actually take a look at the NVIDIA stocks. This is the weekly chart for the NVIDIA stock, and if you look at its chart pattern, it's very similar to what the major ETFs are doing, such as the QQQ and the XLK. 5th of August, as we know, the markets had a really big swing to the downside, but also they were reaching certain key support levels, and also we had the key timing coming in on the 5th of August. You can watch the past videos, and the market just held, and it's just been for 3 weeks really, really strong. And what it is doing right now is right at the 78.6% retracement, around the $130 mark after finding support from around the $90 mark, which was this structural support around here as well. So what we have actually marked is this shaded region, which will actually be a potential three drives to a top pattern, and also the completion of an ABCD right about there. And so about 154, 155 could prove to be a really strong resistance level, which is also the target for the upside. But it all depends upon the 78.6% retracement resistance coming in. So if the market is actually strong enough, and on Wednesday we have the earnings coming out, so we'll find out on Wednesday how the market, this stock is actually likely to do. But it's gonna have a lot of influence on the overall indices as well. So that is one possibility, that actually it goes and completes this pattern around $155 per share mark. You can also look at it, this is like a ending or leading diagonal. I don't know, there's terminology used in the Elliott wave, but it's like really an expanding kind of wedge to me. So we do have some resistance coming in from the upper boundary of it. So this is going to be a really interesting situation coming up for us Wednesday. So just keep in mind two scenarios: either the earnings are so good that it just blasts off and then we are looking at this target, or the market, it just consolidates around here, and then the NVIDIA could have a move to the downside as well. So actually let's explore this further on the daily chart. So this is the daily chart for NVIDIA, and here what you can see is that this is right, the 78.6% retracement, and this also happens to be the 1.272 expansion of this swing. So let me actually highlight this like this. There we go. So it's a confluence of these two things right about the $128, $130 per share mark, and we have seen for a number of days, 1, 2, 3, 4, 5, 6, the stock is not able to close above that. And then if you look at the 22nd of August, it's a pretty bearish looking bar, but then the next day we just had an inside bar, so it is actually, the market is sideways. We also had that minor timing coming in, so it might have to do something with that, but this upcoming Wednesday is when the earnings are coming out, so I think we'll get this resolved either way, either the pattern that we looked at the weekly chart, or it finds good resistance from here, and then possibly it could be a situation where we might be actually looking at something of this situation as a possibility to the downside. That's going to be a ABCD pattern like this, which could in fact see the stock eventually, whether, I'm not suggesting it will happen just in one session. If it happens, we do not know. We'll find out from price action perhaps later this week. And then we could even have 76, which is where this breakout point is, where this big parabolic move actually started. That could also be one region where the stock could actually correct down to, and of course it will have impact on NVIDIA, will have an impact on the major indices, Nasdaq in particular, and also the S&P 500. So this is a really interesting situation we are coming up with. We see two possibilities: either the completion of the pattern that we are watching, three drives to a top pattern with ABCD, or if it the market is not able to break above 130, which is 78.6% retracement level, and also 1.272 expansion, then the possibility of an ABCD challenging these lows of around 90 and maybe beyond that is also a possibility. So really watching NVIDIA really carefully for next week. Okay, now we'll take a look at Apple. So this is the weekly chart of Apple. When it comes to technology, in my opinion, where we are in the cycle, especially for the tech stocks, so the Nasdaq 100, we have seen that big completion of that big ABCD cycle, and we have not seen the market actually break above the 20,750 mark. That was our target, completing the big ABCD. In my opinion, in technology, we really have got a really handful of stocks now where we should be paying really close attention to. So NVIDIA is one of them, then Apple, and then the Meta, formerly the Facebook. So these are the kind of three stocks that personally I would be looking at when it comes to the tech sectors, and we'll actually look at some of the patterns in some of the other stocks, and perhaps you will also agree with me. So here we have a pattern which is a little bit similar to the NVIDIA, in the sense that we had a pretty strong move to the downside 5th of August. As you guys know, markets had a big drop. Also, we had the perfect timing coming in, and right here we had a target of about $200 per share level if the retracement would come in, and we had drawn this gray zone, which is also the structure support around here. So now the market has retraced right at the 78.6% retracement. So one chance is that either one scenario is that we break above all of this resistance, so we break above the or go for new all-time highs. In that case, we have the 248 and $262 per share level as the upward targets, and we could have another ABCD like this, which will make the about $260 as more of a target. But before that, it needs to get clearance from this 78.6% retracement, or there's one possibility it just gets into this gap, which is this gray box, maybe also get very close to the highs of 15th of July, maybe slightly higher high, sort of like a double topping pattern. That is one scenario, and if that takes place, then this will be a range bound market, and we have seen the Apple go in a really long trading range for a long time, starting from 17th of July and finally coming out of it around 15th of April 2024. So it could actually do something similar to that, but the chances are the momentum is pretty strong that we could eventually see the move to all-time highs for Apple. So really watching for these two scenarios. 78.6% retracement where the stock is pretty much right now, $230 per share level, really key resistance level to watch. Now let's take a look at Tesla. Here we go. This is the weekly chart of Tesla. Tesla is actually, you can see from the chart, we do have this red ABCD which points to higher prices. So as long as this point C is intact, the CD leg is where we think the market is actually moving into. But the problem I see is this red box, which is the resistance coming from the 78.6% retracement of this potential BC swing. So look at the number of weeks the market is not able to really put in a strong performance to get above that. So that is of concern. And right here, last week, the market found resistance around the 226 mark. So it's not a huge resistance because it's a bullish candle. But I would really like to see really strong candles, the kind of candles that we have seen in the stock of Apple, for example, and the market bumping against 78.6% retracement around here. That would have actually made me a lot more comfortable. So that scenario still remains there, but the alternative scenario is that we could in fact see something like this if the market actually finds resistance pretty much, let's say, assuming this was a market is not able to get above the highs of 19th of August 2024 week, then it could go and test these lows one more time. So again, a huge trading range scenario in Tesla. In my opinion, just a lot of analysts actually view Tesla as a auto company. It actually, I believe in S&P 500 gets categorized as a automobile company. So the Tesla really needs to come out of that, so that the street begins to value it as more of a tech company or more of an artificial intelligence play. They do have a collection of a lot of data through their cars, the data going back into the Tesla headquarters via the Starlink satellites. But I think a lot more effort needs to go into it, so that the strategy they are trying to execute by having lower cost cars and also improving their autonomous driving experience. I think a lot will depend upon that, in my opinion. But here, from a technical perspective, really watching these two scenarios, whether we come back and test these lows, or we still continue the move higher to about $330 per share level. So that's gonna be these the CD swing highlighted in the red line here. Now let's take a look at Amazon. Here we go. So the Amazon completed this big ABCD shown in the black line. This is a stock which really likes to do double tops and double bottoms. Here you can see a double bottom scenario around here. When I say double tops and double bottoms, I don't mean the perfect textbook kind of double tops and double bottoms. Those are very rare, but the stock has done those kind of double tops. You can see here that was a double top around here, but this is also a double top in my books, although the stock went fairly above that, but it actually topped around here. So in my opinion, the Amazon stock might have actually put in a pretty important top, and the key thing to watch is that, you know, when it had this big move low, 5th of August low around here, we have the 38.2% retracement coming around 155. Now that retracement is from these lows around here. That's the CD leg right here, and also we have this trend line, which is this dotted trend line. If the stock begins to break below this trend line, break below 38.2% retracement, then in my opinion, you know, one should not be involved in this stock. That's just my opinion, and it's not an advice at all, so you guys do whatever you have to do. But I'm watching this big ABCD in this stock, and we have seen the stock move quite a bit lower actually. Now let's take a look at Microsoft. Here we go. So the Microsoft has also completed ABCDs of various degrees. So this one is the big one, which goes back to the March of 2020, and the market was strong enough to actually for a number of weeks move higher. Then it completed this purple one, then also an extended red one. Excuse me, that's just the red line, trend line here, and on the pullback it has actually broken below the trend line. It might actually go and test this, but right now it's about 50% of this swing highs from 1st of July to the 5th of August one. And now the possibility is that it could actually rotate a little bit further to about $370 per share level. That's going to be 38.2% retracement of this entire CD leg higher. And moving below that, of course, there's structural support a little bit below around in that region. But in that case, I think, in my opinion, might actually go for about $340. That will be completing ABCD, assuming that the 19th of August was a high, and we might be in a CD like lower. But if it is able to break below 340, then I think the stock has a greater chance of actually coming a lot lower, coming back into this whole trading range scenario, maybe testing these breakout level of about 310. So the Microsoft stock, I think it has a fantastic company. It has seen phenomenal performance, really big plays on the artificial intelligence as well. But looks like the stock is also completing these big patterns and might be going at a minimum a consolidation, but it might actually also be going for a pretty serious correction as well. Now let's take a look at Google. Here we go. So this is Alphabet or Google. This stock is my least favorite stock in the tech complex, because in my opinion it's completed this big ABC right at this 194. It's a very similar pattern to the Nasdaq 100, where the Nasdaq also completed big ABCD from the lows of the March of 2020. Also the 1.618 expansion of the 2022 bear market, and there's a very similar pattern, and we can see the market is actually pretty weak. And we have seen strong bounces in NVIDIA. We have seen strong bounce right to the 78.6% retracement in Apple as well, but this hasn't done that. I'm not even sure whether it has actually reached 38.2% retracement. Looks like it did, just missed it by a little bit. It could still actually aim for about $171. So in my opinion, this stock is weak. So it could actually come a little bit lower, right to the structural support around 150 $250 mark. That is also going to be 38.2% retracement of this entire CD like higher. And I suspect perhaps Microsoft might actually also be doing a similar kind of pattern as well. Now let's take a look at Meta. So this is the weekly chart of Meta, and you can see the Meta stock is pretty strong compared to let's say Google or Amazon. Um, so that's why it's number 3 on my list. Number 1 is NVIDIA, then Apple, and then the Meta. But the Meta is also it's creeping higher, but it's in a trading range kind of thing. So it's really moving in this wedge formation here. The chances are it could get up to 560, 567, maybe 570, but there's going to be a fair amount of resistance coming from the upper boundary of this channel here, wedge. Now, however, on the downside, if it is able to break below this, and right now, as of now, the 38.2% retracement of this entire swing is coming around 441. That's not going to be good for the stock, and I think in that scenario it would perhaps be, just my opinion, it's not an advice, one might be better not being in the stock. Just a thought. You have to do whatever you have to do. It's not a financial advice. Now let's take a look at Shopify. So here we go. Ever since Shopify reached our target, which was about the 38.2% retracement, it actually exceeded it by about about $10. It has actually retraced quite a bit and tested this lows of around 30th of October 2023. So we were actually anticipating that this low of around 57 might actually hold because it was one of our key support regions, and it did actually, but it was eventually taken out. And then this day, perhaps these were earnings that came out. I don't know. It's actually 5th of August one. So that pattern actually got broken. So this pattern is no longer valid. So I'm just gonna remove it. Here we go. And we might have to adjust this right here, but where the stock is right now, right at the 61.8% retracement, it really needs to find more support. Momentum has been improving because the 20-week moving average is above the 89 period moving average, but right between 75 and $82 is a resistance. It really needs to get above the 82 mark for it to be able to go and tackle the $100 mark. Now, on the other hand, it also actually broke this trend line as well. But this stock I thought might actually look more strong. But right here, it has fantastic performance in the past 3 weeks. Right at the resistance level, it really needs to clear above the 82 mark for it to be able to move higher into 3 digits. So there we go for Shopify. Now let's take a look at Netflix. So the Netflix eventually finally did make a new all-time high. That's the 19th of August week. So that's interesting, and you can see that we have this channel formation here. So it's right at the top of the channel. That could potentially be resistance. So finally, I think we can see that perhaps the 1.272 expansion of this thing comes in at around 727. So I'm not entirely sure if it is able to get to 727, but 727 might be where we also have the upper boundary of this channel. But we really need to be careful for any potential downside watching this channel line here. If the stock actually closes below that, then that will be a break of this trend line here, and then the stock will have the potential to move a much lower. So this is what we're looking at in Netflix. Last but not the least is Roblox. So the Roblox stock is very interesting. I think perhaps the earnings came out today because some of these stocks that which have been higher flyers, and they were really got hit hard during the market draft down 5th of August. but Roblox, you see, that's just doing what it was doing before. It's in a trading range. So because it has already been so much lower, that it wasn't just impacted that much. And it also seems what it shows is that it's actually in stronger hands. So the investors who are actually holding this stock, they're not in a hurry to sell this because of some events that took place, because of something going on in the currency markets. So that's a good sign. That's a big positive in my opinion for the stock. So eventually we are looking for on the break of 53, 67 is our target, because that is 38.2% retracement from all-time highs to the lows that we had seen quite a while ago, 9th of May 2022. Now moving to the daily chart, here we go. This is the daily chart. So it had actually earnings come out on the 1st of August, so it's been nearly a month now. I believe the earnings were good. That's why initially the market did see a pullback, but now the market is actually pretty strong for it. So this actually also makes me think that on the daily chart we are potentially in this kind of a ABCD higher. Here we go. So that actually really perfectly will put us in line with the weekly chart, where we are actually testing the highs of December 2023. So again, the range bound scenario that we actually saw around here, December of 2023, that's going to be the first target. We have this black ABCD here. Moving beyond this will be really positive for the stock, because that will be taking out the swing high of 26th of December. So that's starting a new trend. And then we have the several ABCDs, the smaller one, the blue red one, and then we have the this green one, and then finally the 38.2% retracement, $67 per share. That is kind of our target. Momentum is also improving. We can see that the blue line is the 20-week moving average, and the this green line is 89. So the 20, they are like kind of very close together now, but the 21 is slightly creeping above the 89, and eventually when the momentum is stronger, they then begin to go apart. The kind of thing that we briefly saw around here, around this, but then there was a lot of selling coming in, so they kind of went the other way. But strong momentum, what we see is that the shorter term averages, they begin to lead. The longer term, they get kind of fallen behind, and when the spread between them increases, with the smaller time frame one being on the top, that begins to indicate to us that the momentum has actually been pretty strong to the upside. So thank you very much for watching the video. Good luck, good trading. If you found our video helpful, educational, then please give it a thumbs up, and if you enjoyed our technical analysis, then please do subscribe to the channel. And if you do, then please hit that bell icon button. That way you will know when the new videos are posted and you will not miss anything. So thank you very much for watching the video one more time. I hope this time the audio was much better, so I do apologize for that scenario, and speak to you guys soon. Good luck, good trading, and speak to you guys soon.